let me ask you first, Jerome, just to kind of get us started. What was it that inspired you to get into backtesting? Because most Forex traders come to the desk and they just want to click the button, trade, see the money coming in on their phone. My phone is an ATM, you know what I'm saying? Pips pay my bills kind of thing. And it's not actually what happens, right? So what motivated you and where did you get the idea to start backtesting?
I think the idea comes from taking it seriously and having a long-term approach in trading. And I was one to never really kind of gamble my money. So I never wanted to enter the market blindly. I did it in the beginning of my stages, did enter trades, but very small risk, like risking $10, $5. Sure. But as I kind of got surrounded by a lot of, professional traders, people that take this seriously and, doing it for the long term, I found out that backtesting, having confidence in knowing the statistics of how your system performs over the long term and how it goes through different market cycles, was definitely a way for me to come into trading with a very clear mind and remove emotions from my trade and just become more confident in my overall trading. So having that statistical data in front of you, knowing how the trades play out and how the parameters in that trades affect the outcome, so you can easily kind of select what trades and what parameters will increase the outcome and kind of shift the parameters so you can get like a high probability trade setup. So
interesting. So that comes from the data that you get from the testing is what you're saying.
Exactly. Yeah.
When you got into backtesting, can you when people ask you, what is backtesting? How do you define it for people?
Just keeping it simple, going back in historic data and having a rules-based system and then applying that to historic data over time.
Were there specific pairs that you were looking at?
Mainly just I started with the major pairs and then I'm shifting into all the cross pairs.
Got it.
So mainly just a lot of the GBP.
Which makes sense.
Yeah, exactly.
Higher volume. Yeah. With the backtesting that you've done so far, are you keeping that all in the spreadsheet on Excel? How, I know a lot of people, if you Google it, I know I did when I first started, it was like trading backtesting spreadsheet. If you Google that, all these crazy spreadsheet results come up. Do you have a special spreadsheet that you use to track all this?
Yeah. So I created my own spreadsheet in Google Sheets, and I can basically import all the parameters and then entry data, entry type, like the time, date, exit data, price, all that type of stuff. And then I can filter out all the parameters as well.
What's the number one thing, out of all the data that you've looked at so far with the ASFX systems, what's the number one thing that stands out to you the most as a unique data point? Was it the time of day? How many entries? What pair? What stands out the most through your testing so far?
If we're going with the parameters, I think with that TDI, if it's swapping or if it's flat or rising or falling, depending on which way of the direction of the trade. So that is a very powerful metric to keep in mind when looking at trades. So, and also coming through that, the EMAs, obviously trading counter trend or with trending, massive difference on how to trade the outcome. But with our system, when you're trading with our entries, you're more times than less, you're hitting 1R, 1.5R, right, 90% of the time. So obviously it's good to know that metric and how that kind of performs, because then you can kind of adjust risk and how your trade management around it.
I was doing a call with Lindsay a couple of days ago, and she said to me that she didn't really know how to read risk reward before she came to ASFX. So how important has the fact that you are reading, where does risk reward come into play when it comes to your backtesting, I guess is a good question.
I think it comes into levels. So I think we were discussing this earlier, with the A1 system, for example, we know where we put our stop. And because we are using EMAs as our kind of significant level and our zone, when we are putting our stop either below an EMA or just below it, we know that it should hold that level. So being able to calculate that risk, and if it obviously goes below that level of price reverses, you don't want to be in that trade. So having that risk and knowing where price may come to, based on our other parameters, such as the Asia session high,
EDR.
Exactly. Yep. So being able to have all these parameters where you can kind of justify and build a risk profile just by putting all these parameters in place and just analyzing very basic price data and the indicators we use has given me a much more better perspective on how risk works. And when price reverses, you just want to leave it and maybe look for a different entry or just look for a different pair.
What through that process do you think you've learned most about yourself and who you are as a trader? Is there anything that stands out as like a quality in yourself that now you're super aware of it and it's helped you make better decisions because you're aware of it?
Definitely. Selectivity and patience would be the biggest ones.
Really?
So coming back from when I first started developing my own trading system, it didn't really have those kind of emotional like parameters in there of patience, selectivity. You just had an entry and exit signal. And if price hit your targets, great. If hit your stop loss, like it doesn't matter. But when I started incorporating that into a live market or even demo trading that and forward testing it, it just didn't sit with my personality. Like if I saw price coming against me, and because my stop loss was like 30 pips, you kind of knew price was reversing. Like just doing simple technical analysis, you knew price may come down and hit your stop loss. So coming to ASFX, testing these systems, it's kind of, and with our trade management, we know when price may come down and hit our stop loss. So we can adjust how we look at that trade, cut our losses, keep them small, and come back and look for another entry or another high probability setup. So with me going through these testing, doing the back testing and finding out how the parameters shift in our favor has made me more selective. So if I see a trade setup, I can keep it as an idea. I don't have to put money on every setup, as you say.
Huge,
like it's
bro.
just,
That's huge.
yeah. So it's just definitely helped me figure out my personality towards trading, how I approach trading, and just be more selective and not have to trade every single day because I'm just waiting for all these kind of parameters to line up, or these high probability parameters anyway. So yeah.
So two more questions for you, Jerome. First one, for people that are new to backtesting, what do you recommend like as the first step to start doing it? Because a lot of people have been overwhelmed by it. They look for videos on my channel. I have one, I'll link it below, about how I do my markups and stuff like that, but this one will be in that same realm. But what do you tell people that are new to it and haven't done it? How do you get them started?
Basically build out, like even do it on paper.
Okay.
So write on a piece of paper your entry date, entry time, the pair you're trading, the signal that's presenting. So if you're in ASFX, A1, D1 or D2, and then write down your entry time, entry price, stop loss, and you take profit. And then
just simple journaling like that. Simple.
It's very simple. No need to
almost the same stuff we have in the trading journal.
Exactly like that. And then just just go through historic data and just write down like when the trade presented, you write down the date, the time, your stop loss, your entry price. And then
it almost should not be a matter of if you would have taken it or not. It's does it fit the system or not?
Did it present? Yeah.
Yes. Does it present? And this has to have rules, and you have to really have to have a checklist to work through to get to that point. But yeah, so you tell people to just keep it simple. I love that. For the people who say, I don't need to do back testing, I just practice when I'm live in the market, what do you say to that?
I think if let's say, for example, you've just found a system online, that hasn't been back tested. Like let's say on YouTube, you see all these strategies. Let's say you hit that strategy like in real time. Let's say you open up your charts, you open your USD, the setup presents, and you take it, and it's a winner, right?
Yeah.
You've never done back testing before. What happens if you take the next 5 trades and they're all losers?
Right.
You don't have that confidence or data to know that, hey, maybe this system had
5 losing trades
in a row.
Right.
Or maybe it sucks. Exactly. But you're not going to have the confidence to go take that 6th trade that would have just made back maybe all 5 losses. You know what I mean? So without that data and without kind of back testing and, kind of having, like with ASFX, like I had enough trust in you to kind of just go straight into demo, like learn the system and just see how it performs.
Exactly. But you went then back and started doing the testing.
And then I went back and started testing it
to build your confidence
because
and make you independent.
Exactly. Because ASFX systems are, proven and tested.
They're testable. Anybody can do it. Anybody can go back and test what we teach in the courses. 100%.
And it's a very easy signal to present in the market, and very easy to test as well because we're using EMAs. So there's not crazy like zones or anything. You're not jumping on the high time frame, the 4 hour to find out structure zones and then come back to the 15-minute and start. Like it's the signal presents in the 15-minute, and then doing all the 1 hour, 4 hour and higher time frame analysis just complement our trades. So 100%. Having no back testing data or not proving a system,
it's crazy to then think you would put real money into that. Right.
Exactly.
Crazy.